London/New York, Reuters. London-listed drug maker Shire Plc said on Tuesday it was willing to recommend to its shareholders a deal with Takeda Pharmaceutical Co, after the Japanese company sweetened its acquisition offer to £46 billion, $64 billion. The development, first reported by Reuters earlier on Tuesday, represents a major breakthrough for the companies in their negotiations, following a pursuit that started on March 28 when Takeda said it was considering a bid for Shire. Since then, Takeda has made 5 offers, the latest earlier on Tuesday. Shire said in a statement it had agreed to extend a Wednesday regulatory deadline for the deal talks to conclude to May 8 in order to allow Takeda to carry out more due diligence and firm up its bid. Shire added that the deadline could be extended further, if needed. Any deal between the two companies is still subject to the resolution of several issues, including completion of due diligence by Shire on Takeda, Shire said. Takeda added in its own statement that it intended to maintain its dividend policy and investment-grade credit rating following the deal. Shire focuses on treatments for rare diseases and attention deficit hyperactivity disorder. The acquisition would be the largest ever overseas acquisition by a Japanese company and propel Takeda, led by Frenchman Christophe Weber, into the top ranks of global drug makers. It would significantly boost Takeda Euro trademark S position in gastrointestinal disorders, neuroscience, and rare diseases, including a blockbuster hemophilia franchise. But the transaction would be a huge financial stretch, since Shire is worth considerably more than the Japanese group. Ambitious cost-cutting will be required to make the deal pay. Deal-making has surged in the drug industry this year as large players look for promising assets to improve their pipelines. A Takeda-Shire transaction would be by far the biggest. Shire has long been seen as a likely takeover target and was nearly bought by U.S. drug maker AbbVie Inc. in 2014, until U.S. tax rule changes caused the deal to fall apart. Shire also has a track record of acquisitions, but its biggest ever deal, the $32 billion purchase of Baxalta in 2016, was widely criticized by shareholders. Dublin-based Shire, a member of Britannia Euro trademark S benchmark FTSE 100 stock index, said Takeda Euro trademark S fifth offer was worth £49.01 per share, comprised of the equivalent of £27.26 per share in new Takeda shares and £21.75 per share in cash. Under these terms, Shire shareholders would own half of the combined company. Allergan bowed out. Allergan plc, the U.S. maker of Botox, had been considering a rival bid for Shire but ruled itself out of making an offer last week. Shire also announced last week it was selling its oncology business to unlisted French drug maker Servier for $2.4 billion. Takeda Euro trademark S shares closed down 1.5% on Tuesday, giving it a market value of 3.86 trillion yen, $35.5 billion, according to Thomson Reuters data. Takeda investors have been skeptical about the merits of a Shire deal, given the size of the potential purchase and the likely need for a large share issue, which could be highly dilutive. Weber was promoted to CEO in 2015, becoming the drug maker a Euro trademark S first non-Japanese boss. Shire traces its roots back to 1986, when it began as a seller of calcium supplements to treat osteoporosis, operating from an office above a shop in Hampshire. Since then it has grown rapidly through acquisitions to generate revenues of about $15.2 billion last year.